Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, June 12th, 5:06 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, last Friday, we went to uptrend with no disclaimers. You can see over here on the trend gauge, we've got market leadership as well as all five of the major indexes above the short-term 21-day, medium-term 50-day, and long-term 200-day moving average, all flashing uptrend. What happened today? The expectation when you're headed into economic data is for the market to just, kind of relax and wait a little bit and see how it unfolds. And we've got CPI Tuesday morning, and then Wednesday afternoon, we have the Fed decision on interest rates. And this is how the day started off, with a very tight morning, gap up about 0.25% on the S&P, and really just went sideways. It was like watching paint dry for the first 2 hours. And then approaching lunchtime, the markets broke to the upside, not with a lot of enthusiasm. Little pullback, and then late in the afternoon, just a strong trend, non-stop trend higher, and then a cut base into the close, led by tech, and basically more of the same. You've got high beta stocks on the day up 1.9%, low volatility stocks negative on the day, 0.06%. So growth and high beta continue to lead the way. Here are the final numbers on the day. RG8, this is our 8 ETF composite, up 1.14%. S&P 500 up 0.93. NASDAQ 100 up 1.7. Dow up 0.6. Midcaps up 0.5. Russell up 0.4. These were both, the midcaps and the Russell were up more, but some dampening of financial reporting by a couple of the regional banks midday caused a pullback in KRE and a pullback in mid and small caps. Global diversified 60/40 stock and bond up 0.5%. In-house GROTECTION up 1.3%. Our 21 over 21, 20 of the 21 were up on the day by an average of 1.8%. The 10 of the 21 over 21 that we own up, all 10 up, an average of 1.9%. So leaders definitely doing their job for the portfolio. Let's dive into some charts, and we'll hit tail of the tape, of course, and charts of interest. So here's the S&P 500. Coming into the day, we were in a 2 days up, 5-day consolidation, a failed breakout on Friday. They came back into the range. We got above 4,300, broke back below it. You can see the area that was acting as resistance over here, going back to mid-August of last year, 4,300 to 4,325. There's also a key fib area mixed in there, and that's where we failed on Friday. And the bears were celebrating. See, we told you couldn't break out. Well, that didn't last very long. You can tell by this candle, a gap up and a close at the high of the day, clearing this 43.25, not by a lot. We're at 43.39 where we close. So you can pull back, 1/3% and hopefully hold this 43.25 area. More importantly to me, 4,300 should hold on any pullback. This 4,300 to 43.25 wouldn't surprise me to pull back into that at all, or flash pull back into it and bounce off of it when we get either CPI tomorrow or the Fed reaction, which is no doubt going to spur some histrionics in the market, as it always does. But the odds of a 25 basis point increase continue to trickle lower as we get closer to Wednesday. So there's your S&P 500. Let's look at the leader. NASDAQ 100 took a break last week. It was down fractionally. Not today's are up 1.7%, back to 9.6%, extended above the 50-day moving average. This is what happens in a bull market with the hottest sectors. You can wait for the pullback. You can say, like a lot of people did last Wednesday, that's it. The extended ride is over. we're coming back hard now, and 3 sessions later, you're back to breakout highs off of the low and for the year, and that's what's happening. Don't argue with it. Take advantage of it. That's what is recommended for your health and welfare, at least financially. Well, mentally too. Dow Jones Industrial Average clearing the 34,000 level. You can see that hasn't been done since early April. We've spent quite a bit of time bouncing around it in January and February before the relative weakness took over on the Dow Jones Industrial Average. But you can see we've been going sideways over the last 2 weeks on a relative basis against the S&P. Had the 2 nice days up, consolidated, it broke above 34,000. Let's see what the rest of the week brings for us. Now let's go to the mid caps and small caps. MDY putting in a very nice flag pattern here. Its high was last Wednesday, tight pullbacks Thursday, Friday, closed near the top of its range today. Was having a bit of a better day. But actually that was small caps that was having a bit of the better day. As you'll see when we go to IWM here, you can see the little bit of a wick left above the close, but still, this is a bull flag that it's putting in after a pretty nice move off the bottom on lower volume, just putting in a little bit of a flag or a handle. Bulls are looking for this to take off to the upside. Like I said, KRE didn't help it today. Here's KRE. Initially gapped up. You can see, we'll bring up a 5-minute chart. You can see the 2 bouts of selling that happened, one here, and then there was another one here in the afternoon. And that put the damper on the rally that was going on in small caps, although it did finish higher on the day. Let's go to the dollar. UUP up just a bit on the day. It was pretty tight range for the most of the day. Gold and silver in some divergence. Gold was weak in the morning, closed just barely down. You can see this 180 support level here, still trending below the 21-day moving average, needs to get above that. Gold stocks were weak early and closed positive, up 0.5% on the day. Again, still can't get above the declining 21-day moving average. And silver SLV down on the day, the weakest of them, but it is above the 21-day moving average. Ran into the 50-day and pulled back and held the 21. So silver, the best performer of those 3. Let's check in with Bitcoin. Bitcoin down 2% today, not showing any relative strength whatsoever. Now to bonds, TLT, the long bond. Bonds the prices started out weak on the day, gathered strength as the day went along. So you can see the TLT into this. Look how this 21-day moving average has been providing resistance. So if we get a sustained move above that, that would be a drop in interest rates. And what the Fed says on Wednesday will probably have a lot to say about the outcome of this. Broad bond index BNB up fractionally on the day, again top of the range but below the declining 21 and 200-day moving averages. Let's go to the yields. TYX, if bond prices are up, well, these closed at 3 o'clock, so you can have both up. And if there was a change the last 30 minutes of the trading session, which there was with TLT, if you go to a 5-minute chart here, you can see the strength the last hour. That's not reflected in the yield. So TNX up, TYX, the 10-year, also up on the day, but reflective of how trading in the ETF went after these closed. That'll show up tomorrow. The VIX now, over the weekend, Barron's, the cover story was the bull is back. Barron's is notoriously noted for putting tops in. It recently put the top in the dollar when it talked about how strong the dollar was. So it's faded often, not today with the market in any way, shape, or form, but the VIX was high all day. We kept thinking with the VIX up and the market up, that's normally a red flag. Was there going to be any weakness that came in? But instead, all we saw was afternoon strength in the markets, especially the large cap tech stocks. But on the day, the VIX up strongly, 8.5%. But look how low it is, trending continues to trend below the 21, the 50-day moving average, and well below the 200-day moving average. Let's go now to the tail of the tape, and we can pause this. You can pause this and dig through the whole thing. You can see the VIX. We're clearly on the bull case, no question about that. News, as I said, CPI before the open tomorrow. That's inflation data. And then 2 p.m. FOMC, 2 p.m. Wednesday afternoon. Day count, after being 2 days up with 5 days of consolidation, this breakout gives us a count of up 1, but a 12-day uptrend overall, 11 days above the 80 EMA, 12 days above the 21 EMA. As I said, the odds of a 50 basis point hike have dropped to 22%, down 7% from Friday when we last reported this. Expectations remain positive as long as we're above the 21 on the S&P and the NASDAQ, and that showed up in today's action, clearing resistance levels here, both on the S&P and filling a gap going all the way back to last year on the NASDAQ 100. Strength on the day, CKY, those are the tech sectors, semiconductors, software, biotech, and jets. Cruise liners were also very strong. Bonds flipped on the day. Prices started out on the downside, ended up higher, just the inverse for yields. Same thing with GDX. Dollar kind of flat on the day. Oils and staples, utilities, and real estate, 3 defensive sectors, weak on the day, as well as PIC, which is base metal miners. In-house, no trades. Beta ticked up a little bit because of the appreciation in the portfolio, means the overall cash position declined. So a little bit of additional beta based on capital appreciation. This continues to be what we hold. We'll look at some select charts here in a minute, but the bottom line for the day, a tight morning leads to an afternoon trend up above resistance led by the NASDAQ 100, and there's nothing bearish that I can see today. Again, we're extended on the the NASDAQ 100, but we have been. That doesn't mean that you can't go higher. It means that you just be aware of the situation. If you want to trim some into strength, you can. We did that with Tesla last week as it cleared in, as it gapped up into 250. Still trading around that area, but leaders are acting like leaders, and we're quite all right with that. How about some standouts on the day? Palo Alto, we've been looking at adding this, still didn't. We've got quite a bit of exposure, but this had a very strong day. Quite a bit of exposure, not in the mood to add more with the 2 binary events happening over the next 2 days. We have, as I said, plenty of exposure. AMD portfolio had a great day, up 3.4%. Our preferred AI ETF chat up over 2%, making new highs. Let's see, Meta and Google lagged early but closed strong. Meta up 2.3% on the day. Google was up 1.15%. Tesla continues to, this actually set a record of number of days positive now, still at that 250 level inside day after the reversal last Friday with the gap up, but amazing strength being displayed by Tesla. What else was extremely strong? Adobe, strong. They got an upgrade. They've got earnings later this week. You can see the gap up on Friday, follow through on it today. After hours, Oracle, taking advantage of the AI craze. You can see the gap up today. So it gapped up into earnings, and then it's up 6% on the day and another 3.4% after hours. This is another big NASDAQ 100 stock, which will help the QQQ going into tomorrow. Let's see. CMG, I've been being patient with it. It regained the 21 by the close on Friday. A little bit of relative strength, no real volume coming into it, but it's just coming off of oversold on the daily stochastic, giving it some room to see if it can get the mojo back that it had after its earnings gap up, and then a couple weeks after that. So we're sticking with that position. And Uber continues to set new highs, up 1.8% on the day. And that's going to wrap it. As always, love to hear from you. Email us don@revereasset.com. If you're interested in becoming a client, email my partner Dan Stewart, dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Not showing the bear market stats anymore because, well, we've survived the bear market. We executed our process, stay out of the way last year, taking advantage now of leading stocks and leading sectors showing positive information and generating some pretty decent returns over the last couple of weeks. Because remember, it's not how much you make in the market, it's how much of that you can keep. That's why our flagship portfolio is named GROTECTION, to grow assets during market uptrends and protect them in downtrends. And with that, I'll wrap up today's video for Monday, June 12th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.